Hi, everyone, and welcome to another episode of Government and Not for Profit Accounting Necessities with Jessica Reason. This week, we will discuss a topic specific to governmental fund accounting, converting fund specific financials from a modified accrual accounting basis to a full accrual basis. As a refresher, governments base their financial reporting on fund. The GSAB requires financial statements for governmental funds such as the general, special revenue, capital projects, debt service, and permanent funds to be prepared using the modified accrual basis of accounting. However, the GSAB also requires the government-wide financial statements to report all government assets, liabilities, revenues, expenses, gains, and losses using the economic resources measurement focus and the accrual basis of accounting. Therefore, adjustments are required to convert the modified accrual basis statements to the accrual method to prepare period end government-wide financial statements. Conversions to reconcile fund accounts are processed through worksheets that differ from other journal entries because they will not be included in the general ledger. The worksheets are utilized as a translator between the two accounting methods because they convert processes and elements that are dominant in fund basis financial statements and accounting records into recognizable terms and accounts on government-wide financial statements. One distinction of the modified accrual basis of accounting is the recognition of revenues when they are measurable and available versus the full accrual basis of accounting's recognition of revenues when earned. Also, the accrual basis recognizes expenses, including depreciation, when the good or service is used instead of the modified accrual's recognition of expenditures when the fund liability is incurred. To begin adjustments, government-side statements are sectioned into governmental activities and business type activities. The accounts in fund accounting are self-balancing, so conversions are done at the total governmental fund summary level instead of adjusted for each individual fund. Therefore, the inputs to the governmental activities are the governmental type funds, balance sheet, and statement of revenues in the left column of the conversion worksheet. Additional worksheet entries are added as needed to include general capital assets, general long-term debt, and internal service funds. A resulting calculation from the worksheet entries is the capital assets entry in the statement of net positions. The worksheet allows the beginning capital asset to be appropriately adjusted by adding capital acquisitions and subtracting depreciation and sales of dispositions of capital assets. While many accounts require conversion to prepare government-wide financial statements, some accounts do not. Proprietary fund debts are recorded initially as liabilities. Therefore, long-term debt conversions focus on debt deriving from government fund activities. Also, differences in revenue recognition between the two accounting methods will require worksheet entries when revenue is recognized in a different period under the modified accrual method than the full accrual method. However, no worksheet entries are necessary for government-mandated and voluntary non-exchange transactions because they typically recognize revenue in the same period. Property, sales, and income tax deferrals can also change the recognition period based on the accounting method and should be reviewed because deferrals can impact two time periods after adjustments. While conversion worksheets are not directly shown in financial statements because they are not entered as journal entries, their impact creates more seamless, comprehensive, and compliant account balances for preparing government-wide financial statements. The worksheet mirrors a trial balance format to reproduce the governmental fund's financial statements. The results of the right column of the worksheet entries are balances based on the economic resources measurement focus and the accrual basis of accounting. The results include items that were labeled as expenditures being labeled as expenses. The balances provided by the worksheet adjustments create a pre-closing trial balance for the governmental activities section of the government-wide statements. Once adjustments are complete and the account balances are shown in the accrual method, the statement of net position and statement of activities can be prepared. Government and not-for-profit accounting vary greatly from for-profit accounting. The generally accepted accounting principles include a higher magnitude of justification because the purpose of accounting is not to return the highest profit, but to maintain a budget and serve the citizens of its region. The GSAB recognizes that the modified accrual method of accounting is helpful for interested parties like taxpayers to understand how the government is budgeted and spending its money at the current moment. However, the GSAB also recognizes that elected officials can benefit from having a fuller perspective of the government's finances through the full accrual method of accounting. Maintaining one method throughout the year to convert to another method at the end of the period may seem like a lot of work and sometimes redundant. However, the outcome is to better inform all of those interested in the government's finances and present the fullest picture possible. Thank you for joining me on this episode of converting fund-specific financials from a modified accrual accounting basis to a full accrual basis. Join me next week for another episode of Government and Not-for-Profit Accounting Necessities with Jessica Reason. Thank you.